Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. And if you're new here, every Saturday we start off the weekend right by breaking down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now, that being said, in today's episode, we're talking about Elrond's massive announcement, Cardano NFTs, secret network, our usual 404 logic not found segment, and more. So make sure you stick around for all the updates in this episode. But as we always do, let's kick it off with questions from you, the awesome folks who watch my channel and listen to the podcast. And if you want one of your questions answered, make sure you leave them in the comments below, tweet me at Hashoshi4, or leave them in the Hashoshi Discord, which will be linked down below. And if you would be so inclined, please do subscribe to the channel, follow the podcast, and hit the bell notification button so you get a heads up whenever I post new episodes of Crypto Over Coffee and more. So let's go ahead and dive into these questions from you guys and answer those. Now, the first question of the day is from JJT. Hi, Hashoshi, could you share with us your thoughts about the fundamentals and future of Uniswap? And sorry, guys, I'm sick, so I'm like, my brain is working super slow. Basically, what I would like to say about Uniswap in response to this question, because in the interest of time, I can't go through all the fundamentals of Uniswap. The basic idea behind Uniswap, the idea that you have community-run liquidity pools which feed the ability to make trades or swaps between different cryptocurrencies, be able to make multi-hop trading pairs in a sense, that fundamental value proposition is still extremely valid. There are other competitors out there now. You have Sushi. People say 1inch is a competitor. No doubt there are competitors now for Uniswap that there maybe weren't a couple of years ago. But ultimately, what this really means for Uniswap is that this next version of Uniswap is going to have to really double down and up the ante. And so one of the things that I think Uniswap is really taking seriously is the opportunities that L2s, layer 2s, offer in terms of reducing the price of making these swaps, so reducing your overall gas prices, making sure that the incentive models are super well designed so that people want to provide liquidity. One of the biggest issues these days is, you find a trading pair where there's just not enough liquidity there to actually facilitate trades. Making sure that everything is balanced, making sure people are aware of the idea and the cost of impermanent loss. I think there's all sorts of things that Uniswap can do, in the future to communicate the value of its platform. And what's going to happen likely is Uniswap is going to continue to be successful. Their governance token continues to increase in value, and I think it's still a fantastic service. So thanks so much for your question, JJT. Second question of the day is from Anti-Chris. What are your current ideal tools and strategies when looking to take profits from Bitcoin and altcoins you've invested in? Where and how do you typically allocate said profits? So if I'm taking profits from an altcoin, and I've talked about this before, but I usually set myself sort of windows, right? I say, at this price, I will sell half of my holdings. At this price, I'll sell 75% of my holdings. And that's basically where I think that cryptocurrency would go in terms of, accrual and value. And then I stick to that plan, right? It's too easy to get caught up in this emotional roller coaster, if you will, where you're constantly like, oh, I think it can go higher. I think it can go higher. And you never take profits. And that's when you fall into this position where, you could have capped a bunch of profits, but then you end up in a loss, or you only break even when you could have had profit. And so I'll roll altcoin profits into Bitcoin usually. And then Bitcoin is sort of this relatively stable. And I know there's volatility. We'll talk about that, but it's a relatively stable long-term asset. And so I will roll altcoin profits into Bitcoin. But I do take profits from Bitcoin every once in a while. And when I do that, I move it to cash, and I move then that cash into other alternative investments usually. So one of the things that I've been doing a lot lately, and I posted a video about recently, is wine investing. So I've been investing in fine wine, which is a 10 to 20 year time horizon in terms of how long you want to keep that investment in. And so I have those investments that are sort of set it and forget it investments that I'll reinvest my profits in. But I will also leave cash on the sidelines for buying opportunities in Bitcoin in terms of when we get these, crazy drops and dips. I'll have cash on the sideline in stable coins like USDC, for example, that I can use to buy in to different cryptocurrencies when there are buying opportunities. And so usually that's what happens. And of course, you need a good tax tool to keep track of all those trades and all those moves. And so I use cointracker.io, and I'm really loving it. So thanks so much for your question. All right, the third question of the day is from Manuel Gill. Completely unrelated to crypto, but aligned over the over coffee part. What do you use to get your beans, trade, or something different? Yeah, so this is a great question, and I figure people might be curious about my my coffee. So this coffee today is from Red Rooster. I'm actually wearing their hat. Red Rooster is kind of my go-to coffee roaster, and I always buy local beans. I always buy from independent roasters, and I really love single origins from all over the world, but some of my favorites are from Ethiopia, Costa Rica, Bali. I really love just single origin coffees. They're amazing, and so I'll buy them from Mod Cup Coffee, from Red Rooster, occasionally from Blue Bottle. There's so many different roasters that I buy from, but it's all just pretty straightforward. You go online, you pick beans, they roast them for you and ship them to you. So yeah, highly recommend Red Rooster. If you want to check them out, I'll link it down below. Thanks so much, Manuel. And then the fourth question of the day is, what do you think the greed to idealism ratio is in the crypto space? It feels like 99% of what motivates people is to make those quick 100x gains, especially in DeFi. Isn't that problematic? Yeah, I think there is a large component of greed in the markets in general, especially in the yield space, where people are looking at more like safer yield platforms that are really well tuned and maybe don't have the same level of risk that others do, because they're now used to getting 2000 APY on their cryptocurrency. They're used to doing yield farming on Binance Smart Chain. And I think a lot of people are just looking for quick gains. And there is an element of value to that, right? Because these are the markets. If you can play them and you understand the risks, making those types of profits isn't bad, right? So I'm not judging people who do that. I think the reality is, though, is that long term for crypto to succeed, and it will, because there's now there's a lot of greed, but not even the amount of greed that I saw in 2017. I think that people are now understanding that you have to take profits, or you have to at least have a long time horizon. But of course, there are still the 10x, 100x, 1000x. Everyone just wants the get rich quick scheme thing. And this market really isn't a get rich quick scheme. There really is no such thing as a get rich quick scheme. Some people might get lucky and have that happen, but the reality is that it's really not like that. There's a lot of risks out there. And so what I would say to anyone who's thinking about this and trying to determine if this is problematic for crypto long term, I think you just understand that this is human nature, and that ultimately I don't think that this is going to stunt crypto's growth, because this has happened in every other market. The internet bubble, for example, was the same thing. There was so much greed, so much idealism, so much almost like delusion that people thought that all these stocks were going to succeed. And ultimately, it's kind of the same thing here. And so I wouldn't worry too much about it. I think this is a normal part of the growth of such a new and nascent industry. And, if you're someone who's in the space and understands that it's not a get rich quick scheme, you're in it long term, then you don't have to stress about it. So thank you so much for your questions, folks. Let's go ahead and dive into the news. And like I said, feeling really rough and sick today, so I'm going to try and get through all the news as clearly as possible, but it might be a little bit shorter of a video today than usual, but thank you so much for your patience. Now, I do want to remind everybody that in the comments, there's all sorts of scammers that are posing as me. I don't have a WhatsApp, so I will never ask you to contact me on WhatsApp. And if the comment does not have the name highlighted like you see here on the screen, it is totally not me. You can report them and just please ignore their comment. And also, for those who are new here, every week in partnership with the folks at Cobo, I give away a Cobo Tablet steel seed phrase backup device in every episode, and I pick a random comment from the video for the winner. So just for transparency, that product is only available in select regions around the world. So if you win and you're not from a supported region, I'm just going to send you some Bitcoin instead. And so the winner of last week's giveaway for the Cobo is right here on the screen. So a big congratulations to you. And of course, I will be in touch. Now, in true crypto over coffee tradition, let's get things started with a Bitcoin price update, shall we? This week's Bitcoin price action is what I like to call Six Flags style, because we had quite the roller coaster with some highs and lows along the way. We started off the week at the 60K mark, the coveted level everyone is dying for Bitcoin to blast through emphatically to all-time highs. But then midweek, the blood started running in the streets and markets sold off, setting Bitcoin back down to the mid 50K range, so 55,000. And now at the end of the week, we've crept back up towards 60K, with the last reported price that I checked right before filming is over 60,000. And so, of course, it might be different by the time you watch. I mean, a lot of good happened this week. We saw strong support in Bitcoin in the mid 50Ks. We had the crypto market cap break 2 trillion, which is huge. We had more strong indicators from institutions that they're here to stay. But prices largely couldn't break that 60K line until the weekend hit. Now, this up and down roller coaster price action to me is not at all a sign of doom and gloom, but it does beg the question, how long will we trade sort of this volatility before a new all-time high for Bitcoin? And to me, my estimate would be that towards the end of April, we will have a new all-time high. It seems like the support is there to get it, but we'll have to, of course, avoid any big news, negative news, of course, or other unforeseen events that could drag down the price or tamp down enthusiasm. Ultimately, though, which way it will go is anyone's guess, but we will surely find out. I do think April is going to be a good month. When we close it out, I think we're going to be happy. Now, Cardano fans will be pleased with how things are looking this week, as some of the long-awaited NFT or non-fungible token projects like Cardano Kids, Space Buds, and Cardano Bits launched their tokens on mainnet to a wide community of owners. And you may ask, but how, Hashoshi, did NFTs launch on Cardano? Because there are no smart contracts, and I've read online that Cardano sucks. Well, my friend, I'm glad you asked that question, because the answer is one of the things that I love most about the architecture of Cardano, and that is native multi-asset support. The extended UTXO model that serves as the base accounting and ledger mechanism for Cardano was designed to support the creation and management of digital assets at the core ledger level without the need for smart contracts. And this means that the unique token IDs and limited associated metadata can be minted directly to the blockchain without a smart contract layer at all, simply by submitting an ADA transaction to the network. And this can be done right now via the command line. The projects thus far who have launched NFTs have used this very feature to do just that and launch their NFTs to much fanfare. Now, this process is getting much easier as tooling develops around this fairly new feature on Cardano, with wallets and other things catching up. And I wanted to shout out this really awesome community project by Patrick Tobler, who built a web app that allows you to mint Cardano NFTs with an easy-to-use graphical user interface. This is awesome work, and I'm sure it will only continue to improve from here. And by the way, if you want to support Patrick, the Twitter handle is at PadierFind. That's PADIERFIND. And I want to commend Patrick and whomever else may have worked on this project for building such a valuable tool that allows those who maybe aren't comfortable with code or command line to deploy their own NFTs to Cardano. I'm really stoked about it. Well done. And if you're watching, go check it out. I will link it below if you want to mint your own NFT on Cardano. Now, staying in the world of NFTs, I do want to shout out the Secret Network, a layer 1 blockchain network that is part of the Cosmos ecosystem, and one that has placed a special focus on privacy and execution of smart contracts in a closed environment. Now, Secret Network's been around for a while, but they just launched a spec called SNIP 721, SNIP 721, and a sample implementation for what they call privacy-preserving NFTs, which leverage the suite of technologies native to the Secret Network to enable a variety of unique privacy features for NFT holders on the network. But why do you need privacy features for NFTs, you might ask? And I wondered the same thing until I considered the dynamics of the NFT markets more carefully. There are people buying NFTs for millions of dollars, and those purchases are transparent on the blockchain. You can see the token and the address that purchased it. And this means that someone with even a modicum of knowledge could link a crypto address to the real person who was just featured in the news for buying $1 million NFT. And that identity linkage is dangerous. One's on-chain identity is sensitive, particularly because it is the ticket to knowing what wealth someone might have, especially in terms of tokens. So the SNIP 721 standard allows users to choose whether they want their NFT ownership to be publicly known or kept private, and those transactions are private by default. So that solves that one. Now, in addition, NFTs by and large have public metadata, We know this. It details the token's attributes and the associated media that it might have, but this data might not be something that you want entirely public if you're an NFT owner. So this standard allows one to create public and private metadata for the token, which can be used for powerful features like exposing a watermarked version of the image media for an NFT, for example, to the public. And then you can keep the unwatermarked version for yourself so that you're the only one who really gets to see the unwatermarked version. Very cool. So the more I read about the secret network, the more I want to know. This project is really fascinating and really impressive, and I think you guys should check it out even more. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Now, speaking of attention, if you want to help this video or this podcast get some attention from the algorithm robots, please do get subscribed, hit the like button, follow the podcast, because it tells those algorithm robots that you're enjoying what you're watching or listening to, and others might do the same. So thank you for that in advance. Now, this week's episode is inspired by 2017, the last great crypto bull run, if you will, because back then, the same illogical narrative was spun all over the place, a narrative that ended largely in flames. That simple, fallacious narrative was that the bull run would not end, that crypto would keep going up, and that there would not be winners and losers in the big casino that is crypto. As the markets heat up again in 2021 and people believe we are at the precipice of the true bull run that we've all been waiting for, that same falsehood is beginning to brew on the interwebs, especially on social media like crypto Twitter. It seems that people have forgotten, or at least not shared, the anecdotes from the long crypto winter that 2018's crash brought. I cannot express clearly enough that this bull run and month-to-month gains that we're seeing in crypto will in fact end. We will have periods of sideways trading for months on end. We will have big drops. We will probably have years of, kind of whack price movement, to be honest. That's how things have always trended. Assets cannot only go up in price forever. Well, unless you count food and other necessities in the wake of inflation, but that's neither here nor there. Jokes, people. Just trying to lighten the mood. But what I'm trying to articulate here is that everyone in this space should be posturing, or at least aware of the fact that this green candle party will not last forever. And folks should be putting in place risk management strategies and profit-taking strategies, like we talked about in Q&A, to ensure that their gains are met, that they've capped some profit, and that the gains that you've made are not going to evaporate when the time comes for markets to pull back. What happened the last time in 2017 is that the markets were up, things were great, and everyone was bullish. Almost no one back then was thinking the markets would tank. And they were in denial when things pulled back at the top, and it just kept pulling back. People were saying, oh, it's going to go back up, don't worry. And it kept going down. Now, today I see similar patterns unfolding as the bullishness brews, and the excuses for why this time is different are aplenty, whether that's because of institutions or the maturity of the markets or because we haven't seen retail FOMO yet. Whatever it is, the story is the same. Don't be tricked or lulled into a false sense of security with these narratives. We will not be in a bull run forever. And anyone who's painting a bullish picture of the markets without giving that caveat or an acknowledgement of this fact must be met with a 404 Logic Not Found. Now, in other news, the powerful Layer 1 blockchain protocol Elrond just got a major boost with the announcement of the Maiar Exchange, an automated moneymaker asset swap platform that will be coming to the Elrond network and its amazing mobile wallet Maiar very, very shortly. This exchange will operate in a decentralized manner, much like Sushi or Uniswap, two of the most well-known decentralized exchange and swap protocols in the crypto space today. And like those protocols, it will also have its own native token, its governance token, and that is MEX. What will be really exciting and what Elrond network users and eGLD holders will like the most is that this MEX token will be distributed 100% amongst those who participate in the Elrond ecosystem today. It was announced that using network snapshots that will start around April 19th, 2021, those who hold and stake eGLD as well as use and refer others to the Maiar mobile wallet will be getting the majority of these tokens. The distribution of tokens will be around 47% of the total supply to the aforementioned eGLD users in the first year, and then another 45% chunk will be released into the supply by way of liquidity providers on the Maiar Exchange over a course of 10 years, with halvings to the rate of issuance every 2 years. So this is kind of like you see in Bitcoin, where issuance happens as the network continues to do what it does. This Maiar Exchange is targeted for launch at the end of April, and it marks a huge step for Elrond. This launch will likely spur a rich DeFi ecosystem on Elrond, and of course, give users of other DeFi exchange and swap platforms another option to use. So I'm very stoked on this one. In the future, I hope we see an Ethereum bridge. I hope we see other DeFi protocols and stablecoins start to launch on Elrond. And I would also really love to see how the UX turns out on this, because if you can use this exchange and swap protocol on the Maiar mobile app with your mobile wallet, that would be one of the coolest things. And I have a feeling that that's the plan. So make sure you stay tuned. I'm going to be talking more about this in the future. And I actually have an interview coming out on Monday with the founder of Elrond, Benjamin Minku. So make sure you are subscribed and you are ready for that. But folks, that's going to do it for Crypto Over Coffee today. I'm going to go back to sleep, and I'm going to finish this coffee, of course, right before I take that nap. So I want to thank you so much for being here and for watching this episode of Crypto Over Coffee. If you have some time to stick around, I will link up a video outlining my top 3 favorite VPNs out there in case you're looking for a VPN to blanket your internet traffic and a little bit of encryption. So thank you so much in advance. I hope you and your family have a wonderful and restful weekend and week ahead. And until next time, cheers.